Yeah. Two. Yeah. Aye.
Got over money.
I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is hating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it. Yeah, in the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking eyes flicking, had a low wage. Led the bro days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game. Yeah, ayy. All I really wanted was the money in the pocket. Got over money, but the money ain't a topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partners looking oh so fresh, cold, clean. You see that thing, baby. Take the damn picture. Cliff, what's going on, big dog? You doing all right, baby? You doing all
Man,
right?
doing good, man. Another good week. So, we're still in there trying to make something happen.
Yes, sir. And guys, on Instagram, guys, we have this happens sometimes. It's stopping and starting, guys. We're sorry, it's not us. Because on YouTube and Rumble and other places, it is streaming just fine. So if you want to view it in its entirety as well, without it freezing, no worries. Go over to our YouTube page right there. Go to the link in my bio. You get right to it. So we don't know what's going on, guys. Sorry, it is what it is. But guys, man, thank you so much for the time, man. Let's jump right into this thing, Cliff, man. First, before that, man, did we get the bag?
Man, every week.
Every week we got the bag.
Every week, boy.
Yeah, for some reason I do look fuzzy. I don't know what's going on, man.
Man, I was trying to tell you.
I do look fuzzy though, but I still look better than you though. It's okay.
You trying to be. See you making the attempt. You know what
Hey, it's all good, baby. You see that thing, baby. Now let's jump in this thing, man, guys. Don't know what's going on, but hey, it'll clear up. It's internet. It is what it is, guys. We're gonna keep moving forward because we got solutions to get to, guys. We're gonna jump right into this thing, and oh yes, I did get the bag, a big bag, like a huge bag. You know what I'm talking about? And we're gonna wait a little bit longer before we unveil the size of the bag. But it's a great white shark one. That's what it is. But it's what it was, guys. But let's dive into this thing, man. Let's dive into the current market analysis, guys. Man, yo, Cliff, man, on Fox Business. What actually happened is they're talking about the Fed rates, right? And the chairman is speaking tomorrow. It's his annual speaking at some place, and people are kind of like saying, "What is he going to say? How's he going to respond? What's going on? What's it going to be?" And so I just said, oh, "Okay, let's see what's going on." Now, what happened is they actually have an actual chairman that's actually speaking. I'm sorry, not chairman. I'm sorry. He's a former governor on the Fed board, right? Former governor on the Fed board. He's actually speaking about the thoughts of what's going on. Yeah, guys, Stephen, I see it, Stephen, on Instagram. There's a glitch, man. I don't know what's going on. I'll try to restart it again on Instagram, guys. But there's a glitch going on for some odd reason on Instagram, man. I don't know what's going on, guys. So I'll stop it and start it again on Instagram real quick, and we kind of go from there. But Cliff, man, whenever you actually hear of someone, a former governor talking, that was sits on the board of the Fed. How do you normally? What goes through your thought process with the whole thing?
I mean, if you've been on the board before, or you've been in the room, I see it as two ways. You're still in that mindset that you're on the board. You even though you left, you still have that same mindset.
Okay.
Or two, you feel better. You feel better about speaking freely. and telling the truth, and you've broken
Interesting.
from the way you used to be on the board. Usually, it's one or two ways normally.
Interesting. Interesting. Really, really, really. So, whenever a former governor on the board is talking, what you're saying is what he says is should be taken fairly seriously. Is that correct?
Yeah. You should listen what they saying because that's probably what the Fed wants to say, but they don't want to say it through the head people. They want some of the other people to kind of put it out there and see what the market says.
Yeah, yeah. Okay, cool, cool. Guys, we're back on Instagram, and it is still glitching, guys. I don't know what's going on Instagram, guys. Yeah, I'm sorry, guys. Come again, guys. Come over to YouTube or to Rumble, guys. Link is in my bio, and come see it. Unfortunately, guys, there's nothing we can do for it. It's something going on. It's just glitching. It is what it is, guys. I'm sorry, guys. Anyways, okay, let's dive into this real quickly, Cliff, and see exactly what this former governor is actually saying real quickly, and then we'll go from there. Here we go. Let's dive into this real quickly, guys. All right, here we go. Boom.
Oh, we're switching gears. Fed head Jay Powell, remember him? He's speaking tomorrow at their annual conference in Jackson Hole, Wyoming. And big question is whether interest rates are going to stay high or even keep going higher. The stock market sold off today. Let's ask the great Kevin Warsh, former Federal Reserve governor and a distinguished fellow at the Hoover Institution. Kevin, welcome back on set as always. So you got Powell speaking tomorrow morning, I think 10 o'clock Eastern, and interesting interview today in the Wall Street Journal. Nick Timiraos interviewed Jim Bullard, retired St. Louis Fed, a very smart fella. I want to ask you about Bullard's message, because I think some of that might have been in the stock market sell-off today. He's basically saying, Bullard, the economy is stronger than you think, and interest rates are going to stay higher and maybe go higher than you think. What does Kevin Warsh think?
So I think those are two different questions.
Okay.
The kind of economics that you and I know and practice and think about, we don't think a strong economy is what's the driver of inflation. We think it has something to do with...
So hold on. This reporter is actually saying, Cliff, that the reason for rate hikes is because of a strong economy? What kind of shit is this? How that make sense?
Because it makes sense if you're wrong. Remember how I've been saying that about the Fed? It makes sense if you're wrong.
So explain what you mean when you say that the Fed is wrong so that I understand what you're talking about.
The Fed still believes in order to reduce inflation, you have to hammer the economy.
Okay.
That's not true. That's why I've been saying they're wrong. You don't need to do what they're doing. What I've been saying is you don't need to raise interest rates to 12 and 30. You can actually raise them slightly and pause. Raise them slightly and pause. They have no patience. They want to do it. They want to get to 2% now instead of 2% over time because they're worried of runaway inflation. But there's been no signs of runaway inflation since they've been raising rates.
Okay, but here's my question, and guys, I'm exiting off of Instagram, guys. I'm not fighting it no more. So come over to our YouTube page. But anyways, okay. So what you're saying, Cliff, is this here? You're saying that the Fed is wrong, right? You're saying that the Fed is wrong, and and how you come to conclude that the Fed is wrong is you're saying that they're trying to get to 2% too prematurely.
There you go. And what they've already done has been working its way through. Look at home sales. They are down. Look at rent rates. They are settling. They don't need to do more. I've been saying this for months that they could have been doing this much, much earlier. They wanted to be ultra aggressive. To me, what they are worried about is them stopping and inflation coming back. So they're going to not just make sure it's gone. They're gonna beat it, throw it on the back, throw it down the stairs, and make sure it ain't moving. You know what I'm saying? They trying to make sure the economy does nothing, and that's to me too aggressive.
But Your whole argument, though, Cliff, is this here is predicated upon just the market. And I can understand that that was the only variable involved in the situation. But is that the only variable involved?
But it's predicated on the idea that we stay stagnant. You know what I mean? That we stay still, right?
Uh-huh.
So from what I've been saying, they can slow down. We're going to reach 2% whether they raise or not. That's ultimately what I'm trying to say. They're trying to be aggressive in getting there.
I'm hearing what you're saying, but you didn't answer my question. When it comes to inflation, because we talk about the rates, right? They're raising rates to tamper down inflation, right? Is the market the only cause for inflation?
Oh no, it's the government.
Exactly. So what I'm saying is all of the details. When I hear someone say from the reporter or from the government saying that we have a strong economy, that's why we have an interest rate, I'm crying bullshit. Because of the fact that what they're saying is this here is because we have a strong economy, we can print more money. And that's what they want to do. Which is going to solve nothing.
But they have to. We can't. We have to print. Every answer has to include printing money. We don't have it, Dale. We don't got the money.
I'm rocking with you 100%.
Yeah.
And what I'm saying is, don't tell me that you don't peel me and tell me that it's raining. That's what they're doing. They're telling me it's raining, but they're peeing on me. That don't make no damn sense, man. So what I'm saying is, you're telling me this lie because it's a lie in order for you to be able to print some more. I know you can't stop printing because of your bad decision making. But that's what I'm saying. So when I hear this BS, like we have a strong economy, what are you smoking on?
They're basing the strong economy off the what you're saying in the stock market.
Oh, that's the point. But that's bullshit.
And jobless. And so the way because look at what the Fed focuses on, right? What they're focused on is employment and inflation. Employment is cool. Employment is low, right? Employment is low. So they feel like they've got that part. Inflation is the only other part that they're trying to focus on. And their inflation is they're saying is based on the idea the economy is bad. The only way to get inflation low is for the economy to be bad. So they need more people to get fired.
So let me get this straight. The Fed is basing all of its decision making on data that they manipulated. You changing definitions, you changing calculations on the fly, so that you can then prescribe a solution that does not solve the problem. It just prolongs the issue because your partner, excuse me, the government does not want to stop printing. That's bullshit.
There's no conclusion with the United States government does not print money. We can't. We're the only way to get out of debt is to inflate it away. That's it.
Mm-hmm.
What we gonna do? Pay it back? No. We owe like what? I don't even know. 200,000 per every American. You gonna pay it back?
I'm rocking with you, and my whole point is that is their whole goal, is to inflate it away.
You have to
because they can't stop printing. It's a house of cards. It's a house of cards, guys. That's the reason why me and Cliff love real estate. Why? Because we're taking fake fiat currency trash and buying literal assets that generate an income. So, because we don't trust these fools in state, county, a city, and federal government when it comes to decision making, because we just came to a conclusion that they cannot stop printing. So if all your wealth is tied into cash, you are SOL because they can't stop printing. Am I right, Cliff?
Yeah, I mean, you don't want to hold the dollar if you don't have to. There's some other ways, other things you can do, but you don't. If you hold on to the dollar, man, it's pretty simple, man. When you was a kid, how much was things? You know what I mean?
Man,
Look at them today.
man, I could buy a piece of gum, man, for 25 cents. Now that piece of gum is $17.
Yeah, yeah. The example I use is if you ever look back at like 1905, 1910, they had Coca-Cola bottles. Remember those? It was the
Yeah,
same
yeah,
glass
yeah,
bottle and it had Coke in it. It said like
yeah, yeah,
5 cents on it. That
yeah,
same bottle today, same bottle, same Coke, same glass.
yeah, yeah.
Today, you gotta go to the store. It's 225, 250.
Made no sense now. Made no sense. Made no sense, guys. That was my whole point. Is when I hear buffoonery like we have a strong economy, when everything is up, everything is inflated, the whole thing is going to trash. I'm like, what are we smoking on? And can I have some? Can I have some? This is ridiculous. What do you mean inflation means we have a strong economy? What the fuck?
But
Huh?
if you own a major corporation, your stock is up, right? Revenue is up, and you got a lot of employees. If you're an employee, the unemployment rate is low. So if you're looking at those metrics, everything's cool.
Because you manipulate the metrics. That's why it's cool. Let's give it a ban. Let's stop this game, y'all. Let's stop this. Let's
Hey,
stop
bro.
the lies, man. Come on, big dog. Come on. So we basing our whole decision making on numbers that we forged so we can tell you a lie. Excuse me? That don't make no damn sense. If that's the case, why can't we do that as citizens? We go to jail for that. We go to jail for that, bro. Like, come on,
Oh
bro.
yeah, I can go into that, man. But you technically they can't do it. How can they? The question is how often are they taking to court over those things? That's the question. I'm gonna leave it there. Y'all can figure it out from there. There's a lot that
Show
goes into that.
those that pass the laws probably not going to prosecute themselves. Hmm? They're probably not. But anyway, let's keep going, guys. Let's keep going. Let's keep going. Let's see what's going on with this.
With money and credit and the attitude of the central bank that looks like it's trying to been encouraging inflation. On the economy, I got to say, I'm skeptical of the bullish talk on the economy. It might be that the U.S. is an island of prosperity when China's falling fast, Europe's in a recession, and somehow we withstand it. I'm a little skeptical of that idea. Moreover, when I look inside the U.S. economy, that's a lot of government spending. That's a lot of subsidies. That's a lot of special favors.
Come on, bro. Come on, Cliff. Come on, bro. He preaching the gospel right now. He preaching the gospel. It seems like most pundits on TV, they're on these so-called business shows, don't want to talk about that part at all. It's about the market and this, and indicators say this here. And I'm like, well, ain't these indicators false information? Fucking about none of that. Forget that. Look at the indicators, but the indicators is bullshit though. That don't mean nothing at all. I'm not, so okay, no problem. If it seems like that when it comes to business, it is the art of who can navigate the bullshit. Would that be right?
The Fed the Fed has too much power over making things valuable or
I agree.
unvaluable.
Mm-hmm. Mm-hmm. Mm-hmm.
Because the second you put man in charge, the second you allow manipulation of the situation.
Oh, we. Yes, sir. You never
And
lied, brother.
it's so much easier. And when everybody's coming after you, the simple answer is like you said, print money. I don't have to take accountability. It's easy. So we're gonna keep doing it, and that's gonna be the issue. But like I said, I think they're gonna cut rates. I still think they're gonna cut rates next year. I've been saying that for a long time. They're gonna cut rates, and that's why you see the stock market going up because the stock market is about 6 months ahead of everything.
But the thing is, if that was the case, you said that they were going to pause, and he paused, right? But
Yeah,
then a month later, he said, "I got to have two more raises." Why he said that?
because he was wrong.
How was he
He was
wrong?
he because Powell he is fighting a worry. He's not fighting the actual market. The actual market has been falling month over month. when something is falling, why do you need to do more? Just let it fall. So every month for 9 months in a row, we've had inflation drop. 9 months in a row, month
Yeah,
over month over month.
yeah. Mhm.
His worry is if I do say pause and it doesn't fall again or keep falling, then I
Yeah.
have to go back and raise rates. So instead, he's taking the assumption I'm just going to continue to raise rates until it gets very restrictive. And once I see and I know for a fact it's done, I'm going to cut. I'm going to pause 1 month and cut the next.
So what this is why I say that he was worried. I agree that he was worried, right? But he
Yep.
was worried because of the fact that he knows that he's making decisions on the bullshit. He know that. He know that, doc. 1,000%. So he know. Well, hold on. I done made decisions based on some bullshit. So now I have to go ahead and change this real fast. You know what I'm saying? This is some bull. This is a lot of smoke and mirrors, and it's coming down, y'all. I'm trying to tell y'all, it's coming. It's coming. They are trying to inflate this whole thing away. Yes, they are. It is easy to see that. If you don't see that, man, I'm praying for you tonight. I really am. But let's keep going, man. He almost done. He almost done.
For special businesses under the big spending blowout. That's not sustainable GDP. That's GDP that can get you maybe until next November. So I'm a little less bullish on the economy than Jim is.
It's fascinating. The Atlanta Fed GDP Now tracker is almost 6% for the third quarter. Now, I
Wow.
know there's just a few numbers in, but that's a very big number.
Yes.
I think, Kevin, Wall Street, I mean, interest rates have been rising in the longer end of the curve, right? And, for homeowners, for middle income
Look at
folks,
that.
you got 7.5% 30-year mortgage rate, which is a big number.
Jesus.
So the question I have is, are rates heading higher? Because a few weeks ago or a month ago, the consensus was inflation's come down, or at least year-to-year inflation, and therefore rates could come down. But that may not be the case, or how do you see it?
So I'll break that into two pieces. First, for the Fed, I think they're fearful of a hot economy. They're fearful that too many people are working.
Really?
Again, that's not exactly how you and I think about it. But if the
They think it
economy,
drives
the
inflation.
Fed believes the economy is hot, then they're going to keep raising rates. And
Say it again. Say it again. Go.
They think unemployment, high or low unemployment equals inflation. It's wrong. It's wrong. It's a wrong premise. Because if more people working equals higher productivity, you offset inflationary adjustments.
I agree.
You know
What you
see what I
saying?
mean?
What you saying makes sense if the information was true. That's what I'm saying. The information that your whole premise is based on true
So,
data.
so what data you think is flawed?
Number
What,
one,
what ain't good?
simple. They number one when it comes to an inflationary rate, right? The gaslighting us. It was calculated over a 2-year time frame. This year they changed it to an annual time frame. Bullshit. They changed when it came to recession. It was 2 consecutive quarters of negative GDP. They changed it they changed it, so that's bullshit. When it comes to the unemployment rate, what they're saying is those jobs are not the high paying jobs. These are individuals. These are individuals that are going hospitality, hotel. These are low paying wages, and also that factoring in people that have 2 jobs. Again, bullshit. That's all I'm saying. Nick, tell me the truth. Don't lie to me. Tell me the truth. And all of a sudden, look at the stock market. Here's another thing with the stock market. Listen, look at the stock market. It's roaring. Why is it roaring? It's because of the fact that you've infused so much cash into the system, right? You have CEOs and executives buying back their own stock, right? No country is no longer buying our debt anymore at all. or very little of those countries, what's happening is the Fed is originating these T-bills, these government bonds, and then buying it back from themselves, which is increasing the balance sheet. What business on the planet originates a service or product and then buys it back for themselves and is successful? There ain't one. I've given you 4 or 5 situations, and I'm like, this is some BS. Like, tell me the truth, big dog. Don't lie to me. Tell me the truth. Don't manipulate. Don't manipulate the numbers and say, and then then make a decision based on the BS, and then say, see what's going on. Then take it back and do something else. I'm like, man, I can't trust you. Like, what's going on here, man? Just give me the facts. You don't trust us? What's the problem?
Nah, because what I'll give you an example. We already know what they're thinking. They think you could print. So, what would you rather? You tell me what you would do. Would you rather have to fix all the problems? We'd have a 2 to 3 year depression, or would you rather have a recession stretched out over 5 to 6 years?
Of course, to because everybody is not as financial astute or have resources that we may have, and that's okay. Of course, a long drawn out, which is fine, and we can do that. But also, also give us a plan. Okay, guys, this is what we're actually doing because this is what's really going on, guys. Hey, I know this is kind of scary. Here is the plan moving forward. One, we're going to stop printing so much money. So it means Congress, as well as the executive branch, we got to stop printing so much money, right? Number two, if we're going to continue to print a little bit, we got to unleash our energy, our natural gas, our petroleum, our oil. We have to really dive into our rich resources so that we can offset this printing. Because now we can actually have currency countries buy our products and services because they don't want our currency, they don't want our dollars, they want our goods and services. That's what they want. Let's become an exporter, right? An exporter of our goods and services, so we can get some money back in return. Right now, what I'm seeing is all we actually have right now is just print, and constrain everything else. Loosen up regulations. Give the freedom for businesses to execute at a high level so they can create jobs, which is fine. High-paying jobs, which is fine as well. Also, cut taxes. You got to be able to cut taxes as well. So why? Stop being a burden on the American people. They're really the consumer. They're really the customer, right? So stop being a burden on them. Unleash American ingenuity. Unleash American energy independence. Unleash America's system without all the regulations, without all the taxes. Then it makes more sense. All I'm hearing right now is just print, and we're gonna tax your ass.
Okay, so you would okay. So the answer to the question is you would do a recession over 6 years, right? And you implement all those. The only way to do that is to print. If you go through a depression, that would be not printing. That would be everybody. We ain't printing no more. Everything's getting restrictive. We going to zero. Bankruptcy is gonna have to happen. Companies gonna go bankrupt. People gonna have to go bankrupt. That's the only way to reset is going through a depression. So every leader is saying exactly what you just did. Every leader is saying, do I just straight up tell everybody we're gonna have to suffer for 3 years and everything gonna have to go bankrupt? We're gonna have to start over, or they're gonna say, well, let's take 6-7 years, print a little bit, and then just start doing some austerity, slow down our, maybe not print as much, maybe pull back on the taxes and do that stuff. But printing has to be a part of your long-term strategy, or else it's a depression.
I agree with you. That's why I said if you're going to continue to printing, tamper it down a little bit, but unleash American energy, unleash American ingenuity, cut taxes, cut regulations, unleash our system, so that the landing is a lot softer versus boom. Does that make sense?
Right. Yeah, I see what you're saying. And that's what the Fed is trying to do with the landing. Is they're trying to say this is the first part of the depression. If we were to stop, the raising rates is basically the same as saying we're going into a depression. We're gonna keep raising rates to 18%. That'll cause a depression.
Yeah,
So they're trying to force that. Then they're going to try to ease in to like what you just said. They're going to try to stop. They're going to say, okay, let's slow down on the rate increases and slow down. But you're right. They need the partner on the other side to work with them to make that a soft landing.
exactly.
They're doing
And
what they need to. They're saying, hey, we're forcing this depression. We want to do it over the long term. We want to reduce our assets a little bit over the long term. We want to reduce the interest rates over the long term. We can only do that if you slow down on printing.
exactly. And that is the part that I think that not you, but what the masses is not talking about. What this gentleman right here, this former governor on the Fed board, is saying. He's saying that unfortunately the government does not want to stop printing. They don't want to stop doing it. They're not.
Because they only because the people in power right now, I'm just taking a look at what they're doing. Their philosophy is, I want to do what I want to do.
Yes.
Deal with the consequences.
That's correct.
To me, it's like saying when they gave everybody $1,000 because they're trying to help. That it don't help when you're giving me 1,000 and then stealing 1,000.
Thank you. Thank you. That's what I mean by cutting regulations and cutting taxes. The consumer is the American people. The investor is the American people. How can you begin to be more American people centered and not so much government spending centered? That's my whole thing. Yes, we got to print. Yes, we do, because be honest with you, that's what we got to do to make sure it's a soft landing. But if we do it that way, guys, you're going to have to unleash our American ingenuity. And a part of that is not being a burden on the American people. And right now, that's not what they want to do. I think the Fed does, but not the government.
No, they want to spend. Well, at least we're spending less than we were before. That's the good thing.
That's because of COVID, though. That's because of a COVID year.
Yeah, well, I'm saying the beginning of this term when they started. I don't know how many bills they passed and trillions of dollars and all that.
Okay, I got you.
We can't pass those bills anymore. That's the things that were causing. I mean, you had states with $200 billion surplus or the $100 billion surplus. It's gone now. They spent $100 billion. Show me something. You know what I'm saying? You spent $100 billion. Show me something.
Show me some,
school,
baby.
It better be the best school I ever seen. But we got the best. We spent $100 billion on the school. All the kids going here. Something. But nah,
yes. Show me something, bro. But the thing about it is that money's going to special favors, special interests. It's going into areas to where it's making those in power more rich. It's just strange at how the money's flowing, right? When it's printed, it's flowing to those very same companies that actually the lawmakers have stock in. Interesting. Very interesting.
Well, it's to me, it's just good business. It just makes sense. Who's the number one consumer in the United States?
The American people.
The government.
Oh, okay. The government. I got you.
The government. And what I mean by that is to say, who can write a check for $10 billion and it's nothing? Who writes a check for $10 billion? The government. So I could try to go get you. If I sell something, I don't know, paper. I sell paper. I can sell it to Dale. I can sell it to his neighbor. Or I can go to the United States government and they will buy $50 billion from me a year.
And they'll overpay. So the cost could be on that size of order $1 billion, but they pay $50 billion for something that should cost $1 billion. That's why when President Trump was like, "Wait a minute, why are we paying so much for this damn plane? Like I know planes. This should cost nothing but $100 million. Why is this invoice for $700 million? It doesn't make no sense." Because somebody getting rich. Somebody getting rich.
Oh yeah. I mean, it's the and that's why the problem is, if you give anybody, you give me an unlimited check, give me 100, give me $6 trillion. I'm gonna buy me a couple football teams, a couple basketball teams. You know what I mean?
So Liz, boy.
So, but you're right. if we can't get the other side to do it, then we're gonna have the Fed be, and that's what. But I'm telling you, they're gonna cut because the other side is going to put pressure on them because it's an election year, and they're gonna
Ah,
say, "Hey, if we can cut these interest rates lower, we can start boosting the economy." On false, it's false,
yeah, it is.
but the
It
economy
is.
will rise because if interest rate, let's say if to get a mortgage, they drop down to where it's 5.5%.
Yeah.
Average person's 5.5. Economy's
Mm-hmm.
back. It's booming again.
Mm-hmm. 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 Gotcha. Now, all right, guys. That was me and Cliff getting in a little bit, man. That's what we do. Now, Cliff, man, based on what we just talked about, we spent about a good 30 minutes on the economy. I think it was a good, healthy discussion. Um, what type of deals, real estate transactional deals, will be coming if the Fed does what he's projected is to raise the rates again?
Man, office buildings going down. Uh, Anybody who got a construction loan who can't get,
Ooh.
who's based on long-term finance, they stuck. They stuck. Somebody who got into an apartment complex and and now they have to refi and the numbers don't work. On an apartment complex, maybe you went after a $10 million building because you think the cap rate was going to be 5, 6. Now it's 8, 9.
Jesus. Jesus.
Who was it? I think there's another dude. He got a YouTube channel, Ben Mala or whatever. He is
Mm-hmm. Mm-hmm.
losing millions because
Wow.
he did not get a fixed rate on his. He has $250 million in real estate and he didn't get a fixed mortgage.
Mm. Mm.
So now he's
Mm.
paying millions because the interest rates are higher.
And
So
guys, he has and he has to.
yeah,
He has to, guys. It's those type of
but
deals. Go ahead. Go ahead. Go ahead.
I was gonna say who makes money from that? If that guy's paying millions more, where's the profits going? The bank. The banks are like, yeah,
Mm-hmm.
raise them.
Mm-hmm.
And while you look at your bank account and they'll give you 1%.
I mean, just taking advantage of you. But at the exact same time, that right there is an opportunity for the sophisticated and wise investor, because you can come in and rescue somebody. You can come in and do something different. You can go to the bank and begin to negotiate, because the bank does not want the assets back. Well, they don't. They want a loan on their books where they can monetize and sell in the mortgage-backed security and or collect interest. That's all they want. SFRs, um, subject to is going to be off the chain. Those luxury homes,
Oh yeah.
they're going to be on the market for a long period of time. I would not be surprised. I'll give you guys an example. If you have the partner together, a partner that actually has the resources, and or you have the resources or the credit score. But I just said the resources. I would not be surprised if someone approached a luxury homeowner who just wants to get out, and they just sign over the deed to you, subject to,
Oh yeah, there's somebody out. Yeah.
because of the fact that they have no strategy. They can't refi. Ain't nobody gonna sell it, and they can't afford the place no more. And then they lack the creativity to maybe turn it into Airbnb or turn it into a destination home to where you can partner with some corporations, and they can hold masterminds there. That's what me and Cliff are planning something like that now. We're planning a mastermind getaway for those that are in the cash flow club, to where we're gonna walk through all these strategies. Food, we're gonna have food there. We're gonna be touring some. We're gonna be touring some houses as well, guys. We're gonna do a lot of this stuff. We probably begin here in Dallas somewhere, or maybe in Florida somewhere that we actually know we can go walk through. Cliff, you agree, Big Dog?
Yeah, yeah, definitely. We do something like that. That'd be That'd be good, man. Just trying to give information, trying to be helpful.
That's all we doing, guys. That's all we doing. So we've been asked, guys. Yes, the free master class is coming. We're looking at a date in September. We can talk about that behind the scenes. I got to make sure everything's good with our families and our time, so we can invest 2 hours of time with you guys. And also the Cash Flow Club, guys. We're going to begin those meetings as well in September. Because we got people sign up for the Cash Flow Club, brother. It's And so, and our whole thing for the Cash Flow Club, guys, the master class is to teach you guys how to locate and find a deal. And if the deal makes sense, we'll fund the deal for you. We can partner. We're trying to get the bag together. But that's all I have for today, man. I think we did a pretty good job, man, talking about the economy, man, which is pretty good. You want to add anything, man, before we exit?
Nah, man, just stay tuned. Everything's about to change soon, so it's a different market, and nobody can predict it, and nobody can even really build much business on not knowing the future. So those who have an insight, man, right now is the time. So just stay tuned.
Exactly. Be very cautious on becoming a YouTube scholar. In other words, I don't need nobody to help me out, man. I'm figuring it out on my own. Good luck. Because this type of economy, these type of unknowns, you need a sophisticated investor, and that investor needs you as well. You need one another so that you can build together. That's why we say joint venture investing, guys, is the most powerful investment strategy on the market today. Joint venture investing. The Lone Rangers will be crushed. Those that have a team, just like basketball. Basketball is a team sport. You can't beat 5 people, unfortunately. So if you're going against me and Cliff, we got a team behind us. You're going 1 on 10, 1 on 15. It's a wrap. It's over. It's over. But that's all I had, Cliff, man. You want to say anything before we get up here, dog?
Nah, that's it, man. You already know. Check back next week.
Yes, sir, guys. You know how we end it every single time, guys, before you leave. And while you can, you see it, baby. I like my hat too, baby. Take that damn picture and give it to your mama now. And holler at your partner. All right, y'all. See you next week. Peace.
Peace.
God give thanks.
Whoa.
Bless God give thanks. Bless God give thanks.
Whoa.
Bless God give thanks.
Whoa.
Big God, big grace.
Whoa.